Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss France's trade. And Franz, please walk us through your initial analysis here.
Okay. Well, hello everybody. And this was one of my better trades so far of the last, I don't know, 9 months or so. Ligand, I believe is how you pronounce it, pharmaceuticals. And this is sort of the background. It was a growth darling in 2017 to 2018, which we're not showing the entire move up here. But towards the end, there's a very climactic move into the middle of 2018. And at that point, you can see this is a weekly chart, you can see in about 2 weeks, everybody saying, get me out at the top, and then it just the selling continues. And essentially, the entire speculative move that this stock had, which continues on the left of the chart, was wiped out by this big reaction here that you've got circled. Then we go into a consolidation. It's actually a redistribution, and that breaks down. And then we get into a sort of an extended trading range here from about August of 2019 through basically December of last year. You can see that after the COVID reaction in March of 2020, there's a really nice rally that takes us up to a couple of different lines of resistance, which I've got drawn across there. But it, to me, looked quite bullish, but it wasn't quite ready. I guess sufficient supply had not been absorbed. So there's another reaction that takes us down to the original support level that had been broken by the COVID reaction. And you can see, as Roman is indicating there, that supply is going down, 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 as price is going down, down, down towards support. Eventually, there's just no ability to move price lower. You can see a couple of nice demand tails there on a weekly basis. And there's demand comes in, and it looks like a spring. It looks like phase C of this pretty large trading range. So this was on my trading. It showed up on my watch list actually, and I like the formation. I like the structure, and I made an initial entry there. Actually, I made 2 initial entries at that first arrow, and additional entries on the way up. And it turned out that this stock had one of the largest short interests in it in the whole, I guess, fairly reputable larger cap stock universe. And this was about the same time that GameStop, that all those short squeezes were happening. And I think this one attracted its share of attention. So you get a really, which you can see there, just a 3-week, 4-week, just hypodermic climactic move that was very much fun to be in, I can tell you. But it was obviously climactic. So then the decision getting into this was, it has a pretty decent count long term. So I was thinking that this would be a real campaign opportunity, but the aggressiveness of the move up has thrown something of a monkey wrench into the works. So you can see that there was a nice change of behavior. Looks like we're going into a trading range, but instead of a sort of a horizontal trading range that we'd all like to see and be accustomed to, it turns into an apex that broke down last week, and I had my stop set at what I think is still a good level, and I got stopped out. And it's always something that we can come back and revisit. So left some money on the table, but it still turned out to be a nice trade, percentage-wise, good return, and so on and so forth. So that's the longer-term structure. Do you have anything, I'm sure you do, to add?
All
Hey,
right.
Ramon.
So yeah, I'm
Okay,
sorry.
you were
I
thinking.
was I was muted, and I didn't realize that I was muted. Okay, so um, this is definitely a big change of behavior here. So we are most definitely know by the end of it the bias. I mean, like there's um, I, I think we don't need even to confirm it. I mean, like right here we're saying like we're in the downtrend. That's it. Um, this bar here becomes very important. So the redistribution is kind of easy from that point of view, like 1, 2, 3 attempts to go up and failure. Good breakdown, so that is suggestive of further weakness. We are going into the upthrust situation here. So this just tells us that one more leg down, because this minus strength is occurring around this bar. And then obviously COVID just has its own characteristics. So I was drawing this type of range, and you
Hmm.
know, it's a little bit tricky here. I don't necessarily want students to do something like this, but I want you to see it. So here's this stride, and one might say like, okay, well, maybe this is a potential stop in action, where for the first time there is a pronounced, intelligent buying by smart interests, and it very well could be. And we kind of seen how into the COVID reaction there is diminished volume characteristics on the shakeout activity. What happens next, as Franz described, is very important, because if we would be like downsloping like this, then we're spending a lot of time above. So there is definitely that bullish character of an ability for the price to stay up and then also to overcome this high and to be above it. So that's like a sign that we are bullish at this point, but we have to have a reaction. And I think that your entries are pretty good, because you're entering on the right side of the trading range, whereas there was an opportunity to make a mistake here and to enter a little bit premature here. I think maybe the depth of the reaction would suggest a retest, so you wait for that, and then you go into more climactic action right here, um, and then the test, and that defines the timing of the entries. Very rapid move up, and more importantly, where into the zone of the original selling. So you kind of expect some kind of reaction. You would be thinking like, okay, well, or where to, like, to which bar? Well, all of them not have not seen any significant testing. So you could retest all of them. So you might be thinking that this reaction might be, significant, go to this level, right? Just because of this support, this support, this support. So that seems like logical. So maybe into the second bar. So at this point, when the price is here, you kind of have to ask yourself a question: what am I going to do? Am I willing to go through a meaningful correction or not? And then you kind of deal with this, and you deal with this on a lower time frame, on the daily. So, Franz, why don't you walk us through your points of entry and exits, and then we'll analyze this.
Okay. Um, Starting where it says capitulation around October the 19th, that was the kind of the lows, and that was where I was looking at it as potentially phase C, because you can see there's an increase, but there's no ability to push price below the local support, and then we get into a very, very tight little trading range that continues for basically a month and a half, with no additional ability to push price down, and as volume or as supply continues to kind of diminish across that whole little range. So it looks like, one of the things that you stress, Ramon, is that when you see supply diminish and you see this sort of failure to go down further, you can expect some sort of a rally. I mean, I have put that into a filing cabinet in my head marked high priority to remember. So here you see where it looks like there's a little bit of an uptick around the very end of November, a little bit of uptick in supply, and it's as I think William likes to say, you push down and recover to close well in that little bar. So to me, that's sort of the timing bar. So that was my first entry, and then maybe the add-on was a little premature, but I put a second position on just a couple days later because I liked the continuing action. Then we move up and we attempt to break through that. Well, it's actually I guess the 200-day, but we have sort of a local upthrust around the 14th, but on good volume. So there's good buying coming in here. There's still a little bit of supply because you can see where that bar takes us up to is sort of the local resistance. We pull back, but look where we come back to. Just about maybe the top 2/3 of that first attempt to push up, and we don't go any lower. And so I'm thinking, well, that's probably the test. Maybe I was a little, again, jumping the gun a little bit, but it turned out to be an okay decision. So I third position on, and then up again, the initial area where that sort of breakout bar tried to test, come back a little bit more, and then go up again. And that was my last entry, and that's where the real markup started. And then I was just moving my stop losses up. But I was giving it plenty of room to breathe, because I was thinking that my intention for this was a campaign trade. That the larger count on a PNF chart is pretty substantial. So I was thinking about the question you asked when we were looking at the weekly is how much of that change of behavior kind of reaction do we want to go through? And I didn't really care, but I had my stop set at, I think, sort of the top of that last bar where selling started to come in, and we'll just have to see what happens after that. So when we get to the top of this run up, I'm thinking for sure I want to scale back. So I was thinking how much. Well, I scaled back initially about 20% of my position on February the 5th, right at about the 200 level. Went up a little bit more, and then bang, it breaks down. So buying on a strong bar, or selling rather on a strong bar, is okay, I guess. I could have managed the exit a little bit better there, but I'm not unhappy with that. And then on the other side of the correction, it seemed like the change of behavior had sort of gotten overdone. And so I decided, well, I'm going to get back in, anticipating the, kind of the inevitable automatic recovery that's going to come. Didn't get, it was a little early maybe, but usually on these big, initial sell-offs, it's not necessarily a bad time to anticipate the automatic reaction. And it went a little bit, I could have waited a couple days and gotten a little bit better, but it rallies back up. I think my entry is about 148, rallies back up to 165. And I'm thinking, okay, well here I'm going to, this was sort of a swing trade. It's time to get out. So I sold off what I'd bought plus the rest of the 20% was now going to be 25%, if that makes any sense. So now I've got three total positions out of initial 4 plus 1 added. So I'm back to 3. And we go into this extended sort of trading range where volume's really low, and the characteristics are that of what happens after a hypodermic. So I'm really not liking that a whole lot. And you can see the zone of selling that price needs to come into to get us out of here, and it's not making any progress at all. And then this is sort of an apex. You can see it better on the weekly chart, but this apex, I'm thinking, well, it's going to break one way or the other, and unfortunately for me, it broke to the downside. And I'm sure Roman will have some thoughts on how you could anticipate that the break in the direction that it came in. But at any rate, it went down, just kissed off my stop loss, and so I'm out for now. So that's the story.
All right. Well, let's dissect this. So, obviously, the points of entry are extremely great. So we are entering here after conditions have been formed for this to be bullish rally. So as Franz had said, no continuation to the downside, very low supply, higher lows the test, and then a minor sign of strength that confirms this whole thing, a backing up action that confirms this whole thing, and then the entries in the backing up action are also pretty good. So I would say like the entries are most definite, definitive yes. I think when we have, let's say, scaled in positions and the price is just a little bit crazy, like it goes up and it doubles or triples, like we've seen many stocks do after COVID-19 reaction. It's very prudent to take some profits. Whether it's 20%, whether it's half of the position, it's for you to define. But you know what might happen, right? When after such a big run up, we're probably going to have some institutional selling because they will be thinking this is an outlier. It went up so fast, so far. I'm going to take the profit. So you want to take the profits with them. And you basically want to find the climactic action and then the change of behavior. So the climactic action is always going to be associated with the increase in the uh, volume signature. So the first increase, which was a substantial increase, was on this bar. And the thinking here should be that momentum is still relatively high. Usually when momentum is relatively high, you could have one more push up. So the next push up happens, and then we're seeing this bar right here with the highest volume signature. So I would say that probably somewhere here on the intraday basis, this would be the first optimal place for us to get out. So this is a true buy in Climax. So exit on intraday. And I think it would be appropriate to exit here, 10, 15% for sure. And then just wait to see what kind of reaction we're going to have. The reaction is not that big, so that is suggestive of the continuation. We continue to the upside, but we definitely don't see a valid breakout, or rather, a very good breakout. So you might be thinking, okay, we might fail here. So here is our range, more upsloping, and then you just want to capture the failure. So here is that failure, and on this failure bar, you can most definitely exit for the second time. And this also could be, 10, 20%, something like that. This bar basically tells us that not only the upswing is done, but also we are changing the behavior. It's a change of behavior bar. And we will be in the reaction after that. Our initial assumption is that the reaction will come to this point right here, maybe to this point right here, which it does. So this exit is a little bit questionable, Franz, I would say.
That was an entry. That was
Oh,
an
that was
entry.
an entry. Okay, yeah.
Yeah.
So if this is an entry, then that's totally fine, because we are entering at the support. So we just don't want to exit at the support. We want to at least wait for the rally of some sort, to exit. Um, I think this is an interesting entry because usually I would be thinking, well, let's have some kind of confirmation, at least a bar like this. But I totally get what Franz is doing here, which is basically at such a low supply level. So we are trying to capture the condition that is being formed by the price rather than trying to capture either the reversal or the confirmation itself. My only hesitation here would be that this is pretty intense reaction. So could we quickly recover from here? And then everything else is kind of confined to this bar right here in this selling zone in red. So first attempt, second attempt, and we're failing, failing, failing. I would say right here, I'm probably out completely. Just because these two attempts, are not producing the reaction that we want. After let's say if this is a major sign of strength, and we're going into the backing up action, we want to see the resilient rally within the construct of the backup action itself to show us that there is bullish activity in the trading range, that there is some buying associated with the first initial value low. And we just don't see that in the way how the rallies are unfolding. So probably the next failure would be a really good bar to exit. So you have two major failures here and here, and those are great places, to get rid of the position or scale down completely. Then after that, it's just all about inability to rally. And then again, there is a next failure. So all of these are failures, and this is your kind of catastrophic exit. That's it. You're done. You're done. You're done. Something like that. Okay. Well, let's go through the post analysis. So bias, most definitely yes. Timing, most definitely yes. Character, most definitely yes. Point of entry, yes. Stop losses. What do we think here about the stop losses?
The initial stop losses were I think the stop losses were okay. I mean, it would have been prudent to move that final stop loss. I had it just sitting at 122 forever, and to move it up when we could see that inability all the way from late March through May of not being able to make any headway. Probably move it up, like you said, that would be your catch. So that last, so maybe, I don't know, 50-50 or 75-25 or something like that.
Mm-hmm. Okay. So let's continue with this. Stop losses, yes. Add-ons, yes. We had really great add-ons here on this trade. And then exit, what are we doing with exit? So I probably would say yes. I mean, like, we could nitpick here certain spots, but I thought this was a really great exit in itself. I thought that this scale out, scale back was like great as well. So I would say maybe yes as well. What do you think, Franz?
I forget what I gave myself. I didn't give myself 100, but it was a pretty good trade.
Yeah.
One of those, I forget which one. Maybe it was the point of entry. Maybe it was
Well,
the stop loss.
let me put it this way, Franz. Let me put it this way. Looking at these three circles right here, where you're exiting, I think these are great exits, and let me explain why. This scale back protects a part of your profits, so you're getting out at the top. I would say that maybe I would just add one more exit right here. This second exit is basically around the failure of the recovery. And then the third exit is more of the catastrophic exit, like the long-term idea did not work. So I would say yes. Let's put it yes. Let's have a 100% variance here. I like this. Yeah. And this is a good trade. So what are the comments and lessons here for you?
Well, how to handle a hypodermic, rally.
Yeah. Okay.
Because one of my mental issues is that I will get into a particular mindset and it's difficult to change. So my mindset typically in a trade is I want to be in this for camp. I want to really, ride this horse as far as it's going to go. But when you get a hypodermic action like this, maybe that's all the farther the horse is going to go. So being more flexible mentally. Hopefully I get in a lot more of these situations. As we know, they don't come around that frequently, but what the next, I'm sure, in the course of my trading career, there'll be more. So, being able to shift gears and recognize that it truly is a hypodermic action, and, be more aggressive with exits.
Okay, so hypodermics. Okay, so taking profits more on reversal. So I really like this one, scale back. So there's one more right here. I mean, this is a little bit. I understand the logic here. I think there was just like a minor mistake here, misjudging the character of this reaction a little bit, and how we overcame this support. But this is a sound logic that we want to buy at the low of the backing action. So maybe just like a reminder. Okay, well, Franz, really great trade. There is definitely such good points, especially about the exit. How do we exit a profitable position? How do we exit the position where the intention was long term, and yet, short term things are showing to us that there is more like bearishness, that the demand is not there. All right, well, Franz, thank you so much for sharing this trade. And as usual, guys, thank you for watching. Until next week.
And thanks for your coaching analysis, Roman. Appreciate it very much.
Absolutely. You're welcome.